Hello everyone! Today, I'm going to guide you through the process of creating your own dividend ETF portfolio. I'm not going to do this with some unused make-believe account. Instead, I'll be using my actual earnings from YouTube. I'm committed to investing my YouTube income into this dividend ETF portfolio, and I want you to join me on this journey. We'll start by opening a new brokerage account, depositing funds, selecting the ETFs I plan to invest in, and making those investments during stock market trading hours. If this sounds like something you're interested in, go ahead and give this video a thumbs up for the YouTube algorithm. Before we go any further into this video, welcome to Cash Money Ideas. Here, we will show you the most up-to-date making money online ideas, tips, and tricks. Please subscribe to the channel, hit the like button, and press the notification bell so that you'll be notified whenever I upload a new video. And lastly, don't forget to leave a comment below. We would love to hear your thoughts. Now let's get back to the video. Now, before we get into the exciting part of this video, where I open my brokerage account and purchase ETFs, I'd like to discuss the advantages and disadvantages of dividend ETF investing. Let's start with the first advantage, which is passive income. Dividend investing is one of the most passive income sources available. All you need to do is buy shares of dividend-paying stocks or ETFs, wait for the dividends to roll in every 3 months, and enjoy the income without much effort. Some companies even pay monthly dividends, providing you with a steady stream of passive income which can be reinvested or used for various expenses. The second advantage is that dividends can reduce your portfolio's risk and volatility. While growth stocks like Amazon, Tesla, and Coinbase are known for their high-quality volatility, dividend stocks and ETFs tend to be less prone to dramatic swings. During bear markets, dividend investments tend to decline at a slower rate, partially offsetting losses with dividend income. The third advantage is the tax benefits of dividends. The IRS treats dividend income differently, resulting in lower tax rates for many investors depending on their income tax bracket. These tax advantages can make dividend income investing even more attractive. Lastly, there's the power of compounding returns. When you reinvest your dividends into more shares of dividend-paying stocks or ETFs, you can experience compounding returns over time. This strategy can significantly grow your portfolio and wealth, creating an exponential effect as illustrated in the chart on the screen. Now, let's talk about the downsides of dividend investing. The first drawback is that dividend-paying stocks usually don't experience significant growth. If you examine the fastest-growing stocks over the past decade, they are typically not dividend stocks. Companies like Tesla and Amazon prioritize reinvesting profits for growth, whereas dividend-paying companies like Coca-Cola, Johnson & Johnson, and AT&T may not experience the same level of growth. The second drawback is that dividends are not guaranteed. Just because a company pays dividends today doesn't guarantee it will do so in the future. Economic challenges or insufficient profits may lead companies to suspend or cut dividends, as seen with Disney during the 2020 pandemic. The final drawback is the lack of diversification across market caps. Many dividend-paying companies are large-cap stocks with market capitalizations of $10 billion or more. A well-diversified portfolio ideally includes small, mid, and large-cap stocks to reduce risk and volatility. So, that covers the pros and cons of dividend investing. Now, I'm eager to start the process of opening my new brokerage account, the foundation for building my dividend portfolio. Before we continue, I'll give you some time to subscribe to the channel and give it a big thumbs up. If you loved the video so far and found the content interesting and informative, please leave a comment below. We'd love to hear what you have to say. Now let's get back to the video. Getting started with your brokerage account. The first step in this process is selecting the right broker. There are several excellent options to choose from. Personally, I'm using Fidelity for this particular account, but here are some of the top brokers in my view: Vanguard, Fidelity, Webull, and M1 Finance. The choice of broker depends on your specific needs. In general, older brokers like Vanguard and Fidelity offer a wider range of investment options, such as mutual funds, options, and CDs, but their interfaces can feel a bit outdated. On the other hand, newer brokers like Webull and M1 Finance provide a more user-friendly experience even though they have fewer investment options. Webull also allows you to invest in cryptocurrencies, as I mentioned earlier. All these brokers are solid choices, and if you're focusing on stocks and ETFs and not delving into mutual funds, options, or CDs, any of them will suffice. Now, let's get down to opening your brokerage account. Here I am on the official Fidelity website. To get started, click on Open an Account. You can also do this from your mobile device or tablet. If you're using an Apple device, head to the App Store, search for Fidelity, and download the app. For Android users, go to the Google Play Store, search for Fidelity, and install the app. Then, within the app, go to More at the bottom and select Open an Account. Next, you'll be prompted to choose the type of account you want to open. Most of you will probably opt for a standard brokerage account. If you're looking to set up a dividend ETF portfolio, simply click on Open Brokerage Account. This will take you to a page where it asks if this will be an individual or joint account. I'll select individual, but if you plan to share the account with someone else, like a spouse or significant other, choose joint. After, click Next. The next question will ask if you're already a Fidelity customer. If you're not, select No. The process of opening account with Fidelity, Vanguard, Webull, or M1 Finance is quite similar. It involves answering some basic questions and signing consent forms, usually taking less than 5 minutes. Since I mentioned earlier that I'd be funding my new account with the money I've earned from YouTube but haven't received yet, I'll use my primary bank account to fund it initially. You'll need to enter your bank account number and routing number. Once you've done that, you'll see your bank account appear in the drop-down list. In my case, it's my primary account, which I'll select to transfer money into my Fidelity account. The next step is specifying where the money will be transferred. If you've just opened a Fidelity account, you should see only one account listed, which is the new brokerage account you opened. Select that account and proceed to enter the transfer details. For instance, I'm transferring $1,000 from my primary bank account to my Fidelity account to kickstart my dividend ETF investments. Remember, you can invest any amount that suits your financial situation and goals. Upon clicking Continue, you'll need to confirm the accuracy of the details and then click Submit. You'll be informed that the transfer will take 1 to 2 business days to complete. So, we'll patiently wait for this process to finalize, and in the next part of this guide, the transfer will be complete, allowing us to start investing in dividend ETFs. Now, here we are in my Fidelity account, and you can see that the $1,000 has been processed. This is the available cash I have to start my investments. Now, let's move on to the exciting part, selecting the dividend ETFs for investment. As you can see on the screen, we have a valuable resource to help us sort through various ETF categories. I'm using etfdb.com. Click on Dividends, since that's what we are specifically interested in. This page presents a table of the best dividend ETFs ranked by total assets. You can sort these ETFs based on various criteria. For instance, by clicking on Dividends at the top, you can sort by annual dividend rate, actual dividend, or dividend yield. If you're interested in the highest dividend yield, simply click on Annual Dividend Yield to sort the table accordingly. It's essential to exercise caution when dealing with ETFs or stock offering extremely high dividend yields, as they can be dividend traps. These are investments that may lure you with a high yield, only for you to discover later that the underlying company is not as sound as it seems. For instance, someone may point out a stock like VALE with a dividend yield exceeding 25% as an attractive option. However, such yields can be a warning sign. Companies offering such yields may not be reinvesting adequately in their business, resulting in slower growth. This might make the stock decline in value even more than what you earn from dividends. So, I'm primarily looking for dividend ETFs that offer consistent dividends and are still on a growth trajectory. SCHD fits all my criteria, so it's the first ETF I'm considering investing in. You could certainly opt for individual dividend stocks, but I'll start with investing in this ETF. Let's transition to the final part of the video, where I'll demonstrate exactly how to purchase your selected dividend ETFs. Here we are on the dashboard of my Fidelity account. To initiate the purchase of ETFs, click Trade. Now, let's briefly explain the order entry window you can see, as it can seem intimidating if you're new to investing. This window allows you to place an order, and it may also be referred to as a trade window. At the top, you can choose the type of investment, typically found only in Fidelity. Select Stocks and ETFs, since we're dealing with ETFs here. Next, choose the account from the drop-down if you have multiple accounts with Fidelity. most of you will only see one account in this list. Your available cash will be displayed, and this is the amount you have for investing. In the symbol field, you enter the ticker symbol of the ETF you want to purchase. For instance, I'll enter SCHD for my investment. You can select buy if you want to purchase the ETF or sell if you intend to sell it. The shares or dollars field gives you two options for buying. You can specify the number of shares you want to buy, or if you prefer to invest a specific dollar amount, you can enter it here and the system will calculate how many shares that amount corresponds to. For most long-term investors, market order is the preferred choice as it ensures the order fills quickly. So, I'll select market order. After confirming all the details, click execute the order and you're done. Now, you're now officially investing in the chosen ETF. When you want to buy more shares of the same ETF in the future, return to your brokerage account, log in, and follow the same steps. Investing doesn't have to be complex, and as you've seen, setting up your account and making investments is quite straightforward. If you found this video helpful and haven't already subscribed to the channel, be sure to do so. If you enjoy contents like this, it's a great way to stay updated. Don't forget to give the video a thumbs up for the YouTube algorithm. Thank you for watching, and remember that investing is a way to secure long-term and legacy wealth. You have the potential to build your financial future, so don't hesitate to get started. You're all amazing, and I'll see you again soon. If you love this Make Money Online video and found the content interesting and informative, please like and leave a comment below. We'd love to hear what you have to say. And press the notification bell so that you'll be notified whenever I upload a new video. And don't forget to subscribe to Cash Money Ideas. See you in the next video.